Hey everybody, Brian Shannon here from AlphaTrends.net. Today is Friday the 23rd of January 2015 and the market's closed for the week here. We did see the S&P 500 gain 1.2%. The NASDAQ double that at 3.4%. So we saw a lot of big tech stocks bouncing this week, and semiconductors had a good week as well. The financials regained some ground, still down 3.8% for the year, and kind of an interesting setup in there that we'll see in a moment. The dollar continued strong, as did bonds, and the big loser continues to be oil. So let's go ahead and take a look at the charts here, starting with the S&P 500. You can see that last week we were talking about this band of support between 198 and 200, and that we wanted to see that hold. Otherwise, if we broke down below it, it would likely lead to a bigger sell-off. We did hold above that, obviously, and we spoke about if the market could get back above 202-ish, it would become less bearish and become more neutral, really. We had that declining 5-day moving average coming into the week, and now we can see that once we got above that 200 level, or 202 rather, we broke out, we pulled back and tested it, held as support. The 5-day moving average turned flat and then higher, and now we're seeing this pattern on the intermediate term of higher highs and higher lows. So this level right up above is really where 206 to 206 and a half is our new little band of resistance that we'll need to break beyond in order for this market to be able to break this level, obviously, and then perhaps continue on to new highs for the year. So what we're looking for this week coming up, I would think, would be the ideal scenario would be maybe a little bit further pullback down towards 204-ish, and at that point, the market would ideally be supported by the rising 5-day moving average. It could then rally back up, create a higher low at this 204 level, and then have the energy to break beyond this little band of resistance between 206 to 206 and a half. You can see here on this chart what we're looking at is the year-to-date volume weighted average price, and that was also critical near that 202 level. It had been holding as resistance, and as I pointed out on Twitter on Wednesday, as it pulled back and tested it, that it often, that has been a fulcrum point this year, and we had a very nice bounce exactly from that point. So again, it's a very important tool. I think that someone asked me today, can I trade without a volume weighted average price? You can trade without anything, but to me, it's one of the more valuable tools. So I find it indispensable for the way I look at the market. But everyone has their favorite indicators and oscillators, and you got to do what works best for you personally. So next week, I think that we continue to see a little bit further pullback, maybe again towards 204, and then find the energy to build to break beyond this resistance here. For the NASDAQ, we were looking at this one as if it got above 101.50, that it would become more neutral. You can see we broke that 101.50, we pulled back and tested it, held as support, and then from there we saw the higher highs and higher lows. We also spoke about the market becoming more bullish above 103.50. Now, the ideal scenario in my mind would have been that we rallied up towards that level, pull back, create a higher low in here, then go, but we just continued to move higher. So what was perceived as a band of resistance, we just blasted right through it, which is why we always call it a potential level of resistance. There's no knowing if it's resistance until it actually gets up there and then turns away. So the NASDAQ is obviously looking better relatively than the S&P 500, and on that daily chart you can see we broke the pattern here of the lower highs and the lower lows. We were right at this trend line, so maybe we pull back a little bit, and ideally if we were to see the pullback in the NASDAQ from here, we've had a nice run from 99.5 to 104.5. So if we were to pull back down towards 103, 103.50, and then I think we could look for this market to find the energy to continue to move higher. Same thing here with, similar situation with the volume weighted average price year to date. That is that we broke above it and we held above it, and now that's where those higher highs are coming and higher lows on the intermediate term are coming from. So the NASDAQ for next week, I'd like to see it pull back maybe to the 50-day moving average here at about 103.20, find some support, and then find the energy to build and break higher once again. The Russell 2000 on this daily chart still continues to be a mess. You have to look at the shorter term time frames to make any sense of it. So on the Russell 2000, what we spoke about last week, and here is that getting above 117.50 is where we would become more neutral. And from a longer term perspective, back above really 119 and a quarter, that's the bigger level that we need to see broken to get a little bit more bullish about this market. So on the 10-minute time frame, you can see here there's that 117, 117 and a half level. We want to see that ideally hold as support if we continue to pull back at all in here next week. You can see the volume weighted average price was very critical in here as well, and I pointed that out on Twitter on Thursday that it was breaking beyond it, and it held as support. So the more times any form of resistance is tested, it weakens the resolve of the sellers there, and it broke out and was free to run higher. So again, the Russell 2000 a little more neutral overall, but acting obviously this week much more constructive. Semiconductors did break that 54.50 level, and what we'll be looking for is pullbacks to find support between 54 and a quarter, basically, well, 54 to 54 and a half. This is where we'd like to see the support. That's where we have that rising 10, 20, and 50-day moving average in there. We've got the year-to-date volume-weighted average price. This market has obviously been stronger, and this is really the bigger band again that we would like to see as support. It had been resistance. Now we'd like to see it hold as support. So it's encouraging to see that the semiconductors are in fact leading once again here on the upside, and that's obviously bullish for the Nasdaq. So the financials have been really the thorn in the side for this market, and again, you'd see here that year to date we're down 3.8% in the financials, and they broke an important level of support over here, 2360 to 2380. And what we spoke about last week was this was a potential level of resistance, that it had the potential that this prior support would become resistance. Well, there was no resistance there. That's again why we call it potential resistance. There was nothing resisting it going higher there at that point. It just blasted right through that level. And as I said to subscribers on Wednesday night, that getting above 2360 would likely lead to a test of I was thinking up here at the 2380 level, which is now actually the volume weighted average price year to date in here as well. So you can see we rallied right up to it, paused a little bit, got another push higher, and today we pulled back to that level. So I think for next week, I'd really like to see this market hold really probably 2370. I guess you could say maybe down to 2360, but we've got a 5-day moving average which is turning higher. So on the intermediate term trend, we're rallying. However, on the daily time frame, we've still got a broken group here, and still I wouldn't expect easy sailing on the upside with this declining 20 and 50-day moving average. So for the financials, I think that you can say that we probably have as long as we can hold above 2360, then I think that the financials can continue to be viewed at as in recovery mode. Let's talk about oil for a moment. We'll take a look at the charts there. Here in the daily time frame, we're still clearly in a downtrend. I keep hearing people saying that we've bottomed, or that that it's done going down. There's no evidence of that whatsoever. This was a new closing low here today. You can see that 45.36 on the West Texas Intermediate crude, and on the if we blow this up in here on the intraday time frame, here we're going to look at each one of these candles represents 4 hours, and you can see we've got all of this year so far covered in it and back into December. But the fact is, we saw yesterday that people were talking about the king dying, and that was going to make it so that crude went higher, and it did blip higher by about $1 on that news, but obviously not enough to sustain any strength, and is not enough to turn a big downtrend around. It just they don't turn quickly. So be patient if you're looking to trade oil on the upside, because it's still clearly in a downtrend. It's guilty till proven innocent. People will guess how far, how much lower it can go. I'm not going to play that guessing game. You can look at prior levels of support or whatever, and we'll know support when it stops going down and starts turning sideways. But here we see that it's clearly still broken, guilty till proven innocent. Let's talk about the biotechs. They had what was the performance for the biotechs this week? They were up 1.5%. Now leading the market year to date. Just behind the IYR, which is commercial real estate. So 6.5% year to date. They added 1.5% this week, and still clearly in an uptrend. We broke some resistance. That resistance we'd like to see hold as support, on closing basis. The U.S. dollar up 21 cents today and had another strong week. The U.S. dollar up 5.1%. The dollar index, that is, and still, you'll hear people saying it's up too much, it can't continue. But don't fight the trend. If you fight the trend, you're going to get exactly what you deserve. You deserve to lose when you're fighting the trend. But it's just the way the market works. As we know, a couple of weeks ago, people were calling this a double top, and I said it's foolish to call it a double top, and because a double top isn't known till well after it breaks down below this level. Hindsight would say it was a big cup and handle here, and it broke that resistance at the beginning of the year, and it continues to be in a strong uptrend. This is the TLT, which is the 20-year bond ETF, and it's still clearly in a very strong uptrend, multi-year highs in here, and at least as far as the this ETF goes, all-time highs. So real strong performance continues for the U.S. and U.S. assets. Let's take a look at the stocks. Apple had a good week. It was got right up to that 113 level that we spoke about, that we've been actually kind of looking at. We were talking about last week that I'm not I look to buy not at a perceived level of support, but I said if you're going to buy in this area because you think it's support, that your stop should go below the low that we saw this year, and very strong 4 days that we saw this week in Apple. It blasted right through the 5-day moving average. It also blasted right through that volume weighted average price year to date. So Apple is recovering here, and it's good to see that you could realistically look at it as kind of in a range. The bottom band of that range, basically 105.5 to 107, and now the upper end of that band, 113 to 115. So now that we've broken this high, that's good to see because we've reversed the pattern of lower highs and lower lows. And for Apple next week, I'd like to see it pull back, maybe even as far as about 111, 111.5. That 5-day moving average could catch up to it, and then I think that we can start to look at Apple as something that can, in fact, sustain some upside. Amazon, we talked about this being a big support level and probably due for a bounce. It did get a bounce. I didn't trade it because I think it's just a big giant mess. But it looks like for now at least that descending triangle we continue to see. The bigger picture is the pressure is still building with these lower highs. What we would need is to take out this high actually up here, so for it to be longer term looking better. But clearly it had a great week. It rallied on big volume here, pulled back, and then continued on Thursday and Friday. Google, another one here that is bouncing nicely. We spoke about it getting back beyond that 510 level, that if you were going to be a purchaser, that your stop should go under here. So I didn't trade, actually I did trade some options in this one briefly this week. It's still got a declining 50-day moving average, so I would expect that that Google would find some resistance in this general area and begin to pull back next week, maybe come back down towards that 50-day moving average at about 530. So I would say if you're involved in Google, it had a good week. Raise your stops up to the level that's comfortable for you, but you don't want to give those profits back, obviously. And look how beautifully it's performing with this 5-day moving average. Higher highs and higher lows above it. It turns flat to sideways, breaks a lower low, guilty till proven innocent, breaks a higher high above a flat to rising 5-day moving average, innocent till proven guilty. It's nothing new, the way that these stocks trade. GoPro started to stabilize a bit this week, but still, we're below declining 10, 20, and 50-day moving average. We're also below the volume weighted average price since it came public. It's well above, up at 62. Intermediate term, we're turning higher, so that's what you've got to look at and say, though, do the odds favor a big rally? Probably not, because we have the lower highs and lower lows, but a bounce within this downtrend looks like it should be able to continue. I would say if you're trading it, then your worst case stop probably goes down near about 49 bucks a share or so at this point. Netflix had a great week. Obviously, we spoke about this one being that it was down into an important level, and that most likely it was due for at least a little bit of a bounce, but obviously it did start to bounce, and then we had earnings report come out, and spectacular response to those numbers. So it's clearly in an uptrend. It's come up, and most likely they come up and close this gap in here, finish filling that gap, and then I would expect some sideways action before it can really sustain another big push. But pulling back towards 400 wouldn't be a bad thing for Netflix. But right now, obviously, it would be foolish to sell it short. Since the stock reported earnings, the volume weighted average price is down here at about 417. So that'll be something you might want to keep an eye on, is since the event that is going forward, what's the volume weighted average price since the event, because that might in fact show some support. Alibaba had a bounce back this week as well. It's still in a downtrend. I mean, we've got the lower highs and the lower lows in here. We didn't break that lower high from over here, so ideally for a turnaround scenario in Alibaba, we had a nice bounce, but it's still lower highs and lower lows in here, so it's good for trading, but it's not good for the longer term picture. I think if we could pull back maybe down towards let's say 101 or so, and the volume weighted average price since it came public, we got back above that. That's at about 102. So maybe we could hold above that 101, 102-ish level and begin to recover a little bit further here. Now some other stocks to keep an eye on next week. I like the way this Oracle acts. I'm in some actually. Oracle is it broke some resistance here in that 20-day moving average. The volume weighted average price since the event here, which was the gap, you can see, let's take another, let me just redraw that. The volume weighted average price since that gap higher is right at about $44.40. So not able to get back above that yet. You can see here, this is the volume weighted average price. But what we have bullishly on the intermediate term time frame is we broke this little band of resistance in this 44 to 44.20-ish level, and now that 44, we would want to see that basically hold. I think that we got going a little bit in here today. I'm going to say for a swing trade, a stop down near about 43.75-ish. If it can get going again, then raise your stops as it progresses. But the longer term picture is still bullish here. Pulled back to this prior resistance. That resistance was tested, held a support at the rising 50-day moving average as well. So Oracle's looking good with a stop, 43.70. And those are aggressive stops that I always suggest. So if it seems tight, widen it out to a level that feels right for you. RGLS is a biotech stock. I have no idea what they do, and I don't really trust these little biotech stocks, but it's got a good looking pattern here. You can see the weekly time frame. This is basically the volume weighted average price right here since the stock came public, and that held. So now on a 30-minute time frame, what we're looking at here, well, let's go back to the daily for a moment. The daily time frame, you can see that we're above the 10, 20, and 50-day moving average. It had that big run, pulled back, and then we saw this resistance a couple weeks ago broken. It pulled back, tested. Now it's in a position where I think you get it back above this level here at about $18.85. Let's just call it. It's probably about $18.80, $18.80 to $18.85. Back above that level, I think you could see this RGLS make a nice run. I'd say a worst case stop probably at about 17.5 bucks a share. If I was to buy it above here, me personally, I would say that I would put my stop just under the $18 level. And in fact, because I don't trust biotech stocks, I would actually go with the call options in here because you can wake up and these stocks often are down 50% overnight, and I just don't want to look at this as for me it's a way of mitigating the risk, the event risk. Another stock that a lot of people talk about and bullishly is FireEye. Now FireEye, there's really not been a lot to talk about bullishly since late last year or first quarter of 2014. Here's the volume weighted average price since this stock came public. So it's at about 38 bucks or so, 38.50, and we've got the stock at 35 bucks a share. So what we saw in here today was that it broke some important resistance at this 34.50 level, 34.50, 34.55. Now tomorrow, that is Monday, if we see a little bit further pullback, we'd want to see that hold as support. We don't want to buy necessarily as it pulls back, but if it's to pull back there and then find support and begin to rally, then you would want to buy on strength. Let's say back above, let's say it pulled back to 34.50, you might want to buy it above 35, or you might want to wait for it to take out today's high. Either way, it looks like it's a good candidate for continuation up towards that volume weighted average price near about $38.50 a share. That'll do it for me today. Thanks for tuning in, and I'll talk to you next week.